So it is my pleasure today to introduce Armen Azatyan. He is the founder and CEO of DXS. And over the last couple of days, there has been a very exciting update with DXS that I'll let Armen share with you. And then in the first ever live demonstration, we'll show you.
Yeah, absolutely. Thank you, Zach. It's my pleasure to be here. And yeah, our platform DXS has an ultimate goal of becoming the genuine Robin Hood for retail traders across the globe. And the recent launch of USD-denominated trading, USD-backed trading, actually concludes the first stage of the path of getting to our ultimate goal. So the last couple of years, we have been polishing our product within a small market of BSV ecosystem. And the next stage would be targeting the low-hanging fruit, the tens of millions of holders of stablecoins. And these are the people that already are familiar with crypto, meaning that onboarding of them will be way more cheaper and smoother, than trying to convert and adopt, non-crypto familiar users. Ethereum, as the most adopted chain, also hosts the foundation of the entire crypto space, which are the stablecoins. But unlike BSV, Ethereum has extremely high transaction fees. So we created a technology that tokenizes USDC, USDT, and DAI stablecoins, the top three most popular of them, on top of Bitcoin Satoshi Vision, meaning that anybody who downloads our wallet, and it's here on the screen, it's called Thesis, will be able to enjoy zero-fee transactions. When you create a wallet, you pick up the stablecoin of your choice, and then you can simply add any ERC stablecoin to this wallet. And the great thing is that when you pay Ethereum fee, for example, $8, the average fee now, you will get 200% of this fees reimbursed in form of trading capital, or bounty money, as we call it. So if I send stable coins to this address, it will increase my balance here. And actually, some of my trades just closed on DXS, so you can see incoming transactions here. And this balance is also reflected here. You can see this amount. This is reflected in the DXS trading application, meaning that Thesis is integrated seamlessly with DXS, and there is no need to deposit and withdraw when you trade on the DXS, and it eliminates a huge hassle that any other trading platform still has. Because when you tokenize Ethereum stablecoins on top of BSV, you're not only getting negligible transaction fees, but also you're getting instantaneous transactions, instantaneous settlement of any transactions. So here you can see the details of my account. My wallet balance is $1,100. This is my bounty money I can trade for free with, and this is the amount of open positions I have. So here are the open positions. For example, I have some BTC, some gold short, some silver long. I'm also shorting NASDAQ, a few more cryptocurrency trades. And every transaction here is accompanied with, you see in the history, is accompanied with blockchain transactions on top of it. For example, this one, yeah. Here you have an opening transaction and you have a closing transaction. If I click here, I'm getting to the what's on chain, and you can see that all of my trading activity is immutably recorded on chain. And that it brings us to the thesis that I initially stated in the beginning of this demonstration, that our goal is to become the ultimate and genuine Robin Hood for retail traders, meaning that after talking to OKX, FTX executives, after talking to numerous brokers, after studying Robinhood business model, we understand that the whole retail trading is based on the big fish eating the small fish, and eating it in an unfair way, because the trading information about my positions, about retail traders' positions, is sold to big fish, meaning that by knowing your trading data, they can squeeze you out with 100% certainty. And that's what we're building here.
Armen, so are you saying that that goes on with Robinhood, the company, and other companies like that? That's how they're making money?
Yeah, everybody. Yeah. For example, there was this example of unsuccessful institutional focused cryptocurrency exchange. They were focused on execution latencies, minimizing execution latencies, but they failed because they missed the whole point. If you don't have retail traders, then your exchange is not interesting for institutional players. And here with DXS, we are building a platform where retail traders can trade against other retail traders, and information about their positions is immutably and securely recorded on the chain. And they can be sure that we can't cook the books, that all of the cash flows are auditable in real-time fashion. There was another example. There are numerous examples. Even our customers are reporting that when they are making profits, it's occasionally the brokerage that they're using, it just creates some artificial obstacles, to withdraw this money. So unlike this type of brokerages, unlike FTX, for example, that collapsed recently, we don't hold customer balances unless these are the collateral of the currently open positions. So customer balance is always held on the non-custodial wallet here, on the wallet balance, and we as a brokerage, we don't have access to it. So everything is held in the wallet.
And Armen, you want to talk a little bit more about exactly when people are putting up their collateral? Like, where is that? Is that in a smart contract? Like, what access to you as DXS has to it? Because a lot of people have heard, we don't have access to your funds, we can't use your funds, and then funds are gone, So I know DXS, it's not possible to do that. So I think maybe a little more of the detail would be helpful.
Yeah, sure. So the collateral of these positions is actually held in custody at the moment. The wallet balance is not held in custody. It's held on custodial wallet. So when you open a position, I will just, as an example, I will just long link, for example, for like $1,000. So when I open a position, I send collateral from my private wallet to DXS pool. And we know that a lot of exchanges, they claim that they're like, they don't hold your funds in custody ever. And it might be the case for some, for example, for Uniswap, or some Ethereum-based exchanges with huge commissions where every trade costs you like 10, 15 bucks. In our case, we understand that it is doable on top of Bitcoin SV, but while we're still small, it really it doesn't matter that much. We are already way more secure than our direct competitors like eToro or PrimeXBT or QuantFury or Robinhood, yeah. But we're focusing on usability at first, so we don't want to follow the path of Uniswap or other Ethereum-based DEXs that are charging extremely high commissions just to be decentralized and trustless.
Hey, Armen, we have a question from Jeff right now.
Sure.
Hi, Armen. Can we go back to the bounty for a moment? I may have misunderstood it. The way I was reading that is that you're saying that as you're transferring in, you're receiving some credit. It almost seems like you're making money out of essentially just doing very little to nothing and actually creating additional money. So can you just explain exactly how that works?
So when you deposit Ethereum to the Ethereum wallet, you pay Ethereum gas fees, right? And we reimburse the gas fees you paid with bounty money. Bounty money is a trading capital, and this is pretty standard marketing tool, used by various of our direct competitors that allows you to open free positions, but it doesn't allow you to withdraw this money. So you keep the profits from bounty positions, but you can't withdraw your bounty balance.
So, I mean, is that sort of booked as like a marketing cost then? The money's coming from somewhere.
The profit, is just like any other profit on the platform, is guaranteed by the liquidity pool and other traders' losses. That's where the money comes from. So when you make a profit with bounty balance, the profit is paid by the liquidity pool, and that's the second use case, the second big use case apart from trading that I'm about to tell you about, and by organic liquidity on the platform. That's how the profit for bounty positions is paid.
Yeah, it may be better for maybe just an offline discussion, but I guess my concern would be is that if the model here would almost seem like the bounty would go down over time as it becomes a more efficient market. I'm trying to understand why it's almost like money's being created out of nothing. That's what it feels like. I know I'm probably misreading this.
Yeah, well, any trading platform offers bonus or bounty. For example, PrimeXBT doubles your deposit when you put something in the platform, because you have liquidity as a trading platform. You have liquidity, and losses always exceed profits, considerably. And that's how you can afford, creating or allowing to open free positions for marketing purposes.
All right. Yeah, Zach had just posted some on the chat here. I think that's very helpful. And then just one other question. You'd mentioned, kind of like the Robinhood model and others. My understanding is like you're very aware of what's happening, what the model is. I don't think the average retail investor is aware of what's going on with these models. Maybe some are, but the vast majority are not. So I'm just trying to understand is what's going to lead the retail investors to come to your platform ultimately if some are aware of this, but most are not.
You're absolutely right on point. That's not how we are positioning ourselves to retail traders. That's our ultimate goal. That's how we view our very long-term strategy. But we're not positioning our platform as like a, genuine Robinhood. We are positioning our platform as the most intuitive, hassle-free, and safe solution, to trade financial markets globally. And we are targeting stablecoin holders, in particular in the emerging markets, because our platform allows stablecoin holders to trade very small size positions, because there are zero fees for transactions, thanks to the BSV blockchain. And so you can disregard huge Ethereum gas fees, and you can open tiny positions. And it means that you can diversify your portfolio across all sorts of asset classes. As you can see, we have crypto, commodities, stocks, indices, forex here. And you can keep your unused balance on your non-custodial wallet all of the time, meaning that you don't need to worry that you minimize the counterparty risk this way. So the main reasons, or the main selling highlights that would drive more customers to the platform is not our ultimate goal, our long-term strategy, but actual day-to-day issues and problems that we're solving thanks to the unique technologies we are using here. And it brings us to the second big use case of the platform, is that here, like for the first time ever, retail investors, and retail traders, they can yield from trading losses. Usually, only big players, liquidity providers, liquidity cartels, and market makers, financial institutions, they were, yielding from trading losses. That's the Robinhood business model. They are incentivized to maximize losses of their clients, in a way, just like any other of our competitors. And in our case, retail traders, they can provide liquidity themselves. And so the trading volumes across all of these asset classes, they can yield liquidity payments for those liquidity providers. And as a matter of example, we just started, the liquidity fundraising 1.5 couple of days ago. We haven't marketed it yet, but as a matter of example, I'll just show you how easy it is to provide liquidity here. Here you can see the total interest over time. The maturity is undefined. Here you can see that over time, you don't know when, it depends on platform growth, you will receive this amount. The liquidity is provided in a form of non-transferable loan, and is only available in a limited list of jurisdictions. So when you provide liquidity, you become a liquidity provider, and you can track the performance in your liquidity dashboard right here.
And Armen, I know that that kind of 800% you're talking about is over like a very long period of time. Do you want to talk about more in the past what liquidity providers have earned within the BSV pool, and then how you're thinking about, opportunities for liquidity providers now with the USD denominated pool?
Yeah. So as I said, the total return is not about maturity, It is about the total potential interest you will get over time, over undefined period of time. At the moment, we are targeting yield of 30% per annum, and it is based on a very conservative assumption that the APY is the annualized percentage yield per customer, would remain the same as it was, like historically, at 0.015% per active trader. And that's the average percentage yield that we generated in the past two years with the BSV trading, beta stage of our platform. On average, we had around 400, 500 active traders a month that generated this amount. And we understand that BSV ecosystem is minuscule compared to the tens of millions of users using and holding stablecoins. So we expect in the near future to achieve 2,000 active traders, which, assuming the per active trader APY remains the same, with 2K active traders, we will achieve 30% APY. And as soon as we achieve this 30% APY, it means that the cap of the total liquidity pool, which is now set at 3.8 million, will be lifted as long as the APY remains broadly in the area of 30% per annum. Here you can see a comparison of other liquidity provision proposals on the market. This is Uniswap, by the way, that I mentioned earlier. On Uniswap, every trade costs you to open a position, it costs you $15. To close a position, it costs you another like $15. And then you need to deposit money, and it's also extremely expensive. So, I can talk a lot about disadvantages of the competition here, but the most important differentiation point is that in case of DXS, we have a public liquidity pool that allows retail to yield from trading losses, like big players have been doing for years and decades. And here's just a brief example of what you would get as a liquidity provider if you put 10K of liquidity in the pool. Depending on the funding round, you will get a limited total return. First round gives you 100K over 10K, and you will be receiving the total return of $8 per every day for 33 years, assuming you have 2,000 active customers and 30% APY. So if a number of active traders goes up significantly, it doesn't mean that the APY will go up significantly. It just means that the cap will be lifted. This cap will be lifted, and the APY will normalize itself back to around 30%. So that these are the target payback periods. And this is like an example, what if we are not able to achieve 2,000, we are like 2 times lower, And there is a nice video you can watch should you wish. And these are our historical numbers. In total, in 2 years, the total volume exceeded 4 billion. Total number of trades exceeded 1 million. And it's all from 400, 500 active customers per month. As the volume per active user since inception as well, and number of trades per active user. So actually, sure, Zach.
I should say, how did you find these users for the kind of initial product, and what are your plans for customer acquisition for the USD pool?
So this for these users, actually, we just launched our product in the BSV ecosystem, and because it's very sticky and very user friendly, we just grew up to the ceiling of what Bitcoin ecosystem can offer in 3-4 months. And the churn since then has been sustainably below 2.5% per month. And thanks to the feedback, detailed feedback from these users, we were able to polish our unique business model and the whole backend and front end systems. As I said, we are very transparent, and even today, we're offering a way more transparent statistics than any of our competitors. So here you can see all of the data, since inception, all the open interest, what kind of positions are open, on that daily trade volume split by asset classes, the daily liquidations also split by asset classes, net profit loss. It's all you can adjust the filters, daily, monthly active users here, the percentage of profitable accounts, so that our future liquidity providers in the USD pool, they can have like a better understanding of what they can expect. And here are our target geographies. So we're going to emerging markets because the emerging markets would appreciate the negligible transaction fees, absence of any minimum trade sizes, minimum deposits, more than anybody else. And notably, emerging markets are very heavy users of stablecoins, because apparently it's way easier to hedge, the fluctuating local currencies with stablecoin than going to traditional banks. So stablecoins are really picking up, and the key downside of stablecoins are the transaction fees, and which we are solving here. This is just a quick user funnel of how we derived 0.15 APY per trader. This is the historical performance of the liquidity pool in BSV. Actually, it's not USD, it's historical BSV performance. And here you can see the amount of liquidity contributed, the gray part of the chart, and the surplus organically generated by trading activity. And the white line is the APY fluctuations across the time. And speaking of our customer acquisition channel, the most important question that Zach just mentioned is that the customer acquisition channel is the following. We, apart from unique social activities, it's all going to be driven by bounty trading. And in just 7 days of bounty trading test that we held in July last year, we were able to attract 3.6 thousand new users. And please note that this is for BSV only, and majority, I would say like 99% of these users, they had no idea what is BSV, how to buy it, and if it's worth holding the trading balance in BSV. So I can't say what would be the conversion from these customers into actually paying traders or active traders, as we say, but clearly there is a huge interest in trading that we saw in Nigeria. Well, this bounty trading test campaign was conducted in Nigeria. In the near future, we are launching. Just hold on a second. In the near future, we are launching a special campaign It's sort of a fun social media campaign to select the chief executive trader in Africa. It will be a person who wants to become a professional trader, and we are willing to give him trading capital and some salary so that he can become our in-house, trading trading student who will be follow the path on the journey to become a professional trader with us. And on the way he will be creating content. And this campaign will be launched and promoted by pre-selected influencers in Nigeria. And we expect to receive hundreds of video user-generated applications from this. And this is mechanics, social mechanics that I used on my previous job when I was doing social media marketing for a travel agency, and it was wildly successful back then. Today, and I mean, with the development of TikTok, we believe that such creative campaigns and pure focus on influencer marketing is the way to move forward with customer acquisition channel. So yeah, basically I think that's pretty much everything I wanted to demonstrate today. As regards to last note, I'd like to say that behind this wallet, we have developed a very sophisticated infrastructure, for Bitcoin BSV tokens, and this can very well become a side business for us, because we just unlike other BSV companies, we strongly believed that the best way to acquire customers and the fastest way to acquire customers is to tokenize existing stablecoins, regardless of uncertainty about the regulatory future. USDT, USDC, and DAI, they have like tens of millions of holders, and so we wanted to solve their problem, the high transaction fees. That's why we decided that it's important and it's in the best of our interest to create our own wallet, to create our own infrastructure, and do this ourselves, given that other BSV infrastructure companies, they see it differently. And behind this wallet, as I said, the infrastructure hopefully will be used by other BSV projects in the near future.
Well, Armen, thank you so much. As always, I have a few questions personally, but want to just open it up for any of our investors here on the webinar for any questions directly to Armen. You can feel free to DM me. You could kind of write everyone in the chat, or you can do the little hand raise and I will unmute you so you can ask the question directly to Armen. Well, I'll get started with one. So Armen, you talk about kind of this little side business of you've kind of innovated on BSV infrastructure, and you might be able to sell that to other companies. There's another kind of core part of your business model that got us at Unbounded really excited when we first met you, about how you shared with us that actually this exchange, even in a success state, you hope is a relatively small part of your business relative to selling the software that you've been able to create to other exchanges. Can you talk a little bit more about your vision for that and how you see that playing out over the coming years?
Yeah, absolutely. that's the third stage of our path to achieve the ultimate goal, and that's the massive scaling. So when we have a big enough liquidity pool, there would be an incentive for third-party brokerages to connect to it. Because we are all based on the blockchain, everything is recorded immutably on the chain. And because by that time we will protocolize the whole liquidity engine. And that's the thing you mentioned in the beginning, that we're not yet fully distributed. We're not yet fully trustless. We still hold the collateral of open positions in custody. But we have already developed a plan how to protocolize it. The plan was developed with Stas, the inventor of Stas protocol that we are using to tokenize ERC on top of Bitcoin. And we can use Bitcoin script to make the entire cash cycle of DXS fully non-custodial. And it means that other third-party brokerages, they can connect to this engine, this settlement engine, liquidity engine, and use it, to provide brokerage services. And we will be, if the liquidity engine and the protocol, they are distributed, they're trusted and non-for-profit, there should be there should be a Chinese wall between the liquidity and the brokerage itself. The brokerage is just a service, so there can't be no interest for the broker to maximize losses of its traders. So that is why we separated even the legal structure of our business, so that the UI, the application itself, is not connected to the liquidity engine, the liquidity engine mechanism. So when the liquidity engine is fully protocolized, we as a commercial entity, for profit entity, we will be selling white label to the application who is already out of the box integrated into this huge liquidity pool that we will have by that time. And that's the third stage of massive scaling of the platform.
Thank you.
Thanks, Zach. Hope I answered your question.
Yeah, for sure. So I've seen you kind of go through now at the beginning of your presentation, like what okay, we got another question from Jeff, actually. If you can go for me.
Yeah, again, thanks, Armen. I think you showed a graphic earlier that the active user, the amount of trading was like 5.5 million. Was that correct thus far? I don't know if you can pull that back up or not.
It's a volume per active user, probably.
So would that indicate that thus far you've had very large players in the ecosystem, and now if you're focusing on emerging markets, now you're trying to bring in sort of just very large volumes of folks? Is that correct?
Well, this includes leverage.
Okay.
Average leverage is 5x, 6x, right?
Okay.
And actually, I can just show you that, well, some of our traders, they are super active, and we don't expect that our average active trader in the emerging markets will be just as active. But even now, we are having a very modest user limits. So the maximum volume per market one trader can open is just $2,200 here. So there will be, we do expect some difference, to the lower average per trader volume, but it should not be drastic.
Okay, so you're saying if a user wanted to come to your platform, and let's say they've got, just write a number, $10 million worth of crypto, they can't just put it all on the platform. There is a limit based on the way you set this up.
We're targeting retail traders, like small and medium-sized retail traders at this stage, because of our ultimate goal in a way, but also because we really want to differentiate ourselves. We don't want to fight for the same customers. We really are not targeting big traders here.
Okay, thank you. It's a very interesting model.
Yeah, and if we target them, we would have to bring in liquidity providers, liquidity cartels. We need to make them deals with liquidity exchanges, and it will really complicate the whole model. Then we will have to maximize trading losses. We will have to create this conflict of interest everybody has. And for today, we are fully vertically integrated trading brokerage with autonomous, unbiased liquidity under the hood.
All right. Thank you.
Thank you.
Oops, I was muted. Yeah, I think the incentive alignment piece is really important here, Armen. And fundamentally, basically every one of your competitors is just not aligned with their customers the way at DXS is. So, my hope is that, you're able to not just attract liquidity to your existing exchange, but like you said, kind of this phase 3 of getting other brokerages to, integrate with your technology and with your liquidity so that other, customers will be able to not just get what they trade sold to, the smartest, most sophisticated hedge funds in the world and get kind of brutally picked off the way that is the case right now. And for anyone listening to this, a guy named Matt Levine, who is like my absolute favorite kind of financial, journalist, comedian guy, and he writes a near daily newsletter on Bloomberg that's free to subscribe to. He in the past has written about the concept of payment for order flow during kind of the whole meme stock era around COVID. Arguably that era is still going on today, but when it was really kind of heating up and there were all these shorts and everything. So for anyone that wants to learn more about kind of this, how payment for order flow works, if you just Google Matt Levine payment for order flow, anything he wrote about there, I think is a good starting place. So I'm seeing a question here in the chat. So of all the available instruments available on DXS, I know, you offer some crypto positions, but most of what you're doing is kind of giving folks in these frontier markets the ability to invest in, currencies in the NASDAQ and US equities. What are traders actually buying and selling? Like, what are the most popular things that they're trying to get exposure to today?
Well, given that I can just show you the actual hard numbers here. And, given that at the moment, all of our customers are holders of BSV, naturally, we see that majority of them, they trade crypto. So 1 million out of 2.7 of open interest is cryptocurrency. Then indices, stocks, commodities, this is like 1.5 million, and forex 0.3 million. That's the structure at the moment, but probably it will change when the USD-backed trading kicks off.
Awesome. And just talk a little bit more, like, so the transparency that DXS has is pretty unrivaled when it comes to the exchange business, even with like decentralized exchanges. So talk a little bit more about, so I see you're on dxs.app/stats. Can you just talk a little bit more about what motivated you to publish so much information about the business and maybe share some more of the real-time stats? And obviously you and I have seen kind of a a private version, but the degree to which you are like literally anyone can go on dxs.app/stats and see these really core metrics for the business is pretty remarkable. I've never seen anything like it before.
Yeah, we do believe that the average trader is getting smarter with all those scams and issues and like sudden trading halts where exchanges are having, especially crypto exchanges. So we do believe that the average trader would really appreciate a fully transparent approach from its broker. So that is why we developed this page that lays out the entire statistics of trading that we have since inception. And in the near future, we will also develop an open source software that would allow anybody to backtrack all the calculations here based on the data stored on the chain. And as I said in the beginning, every trading activity is recorded immutably on the blockchain, which is like another huge thing. It may seem not important at this stage while we're small, but when you get big, suddenly it becomes absolutely vital. And I already briefly touched base upon these charts. You can access it yourself. Yeah, you can filter out. You can we already added USD. USD is still like pretty empty, but in the future you'll be able to track USD pool performance as well. These are the daily liquidations. Daily liquidations are particularly important if you're a liquidity provider, because that's when you get the most of your yield. And as you know, market volatility is distributed extremely unevenly throughout the year. So there are just few very highly volatile liquidity events when you get like up to 60–70% of the entire annual liquidity payment. That's why you want to see this chart in real time. Yeah, these are the net profit loss generated by our customers in the last 90 days. There's the average profit per trade, average loss per trade. That's average amount per trade, and margin committed. So you see, in the last 90 days, the average leverage was actually around 10x. Yeah, and that's the daily and monthly active users. This the metric that drives the expected APY of the USD pool. And this is the most important, probably for any VC, the most important metric, the user churn. Yeah. And yeah, you can also like filter it out and just check, if the customers are sticky or not.
Are they sticky? Tell us a little bit more about that data. So I'm seeing 2.47% average monthly user churn. Yeah, how are you thinking about this data here? It's a little small for anyone to kind of look at, Yeah,
we're very happy with it. We have extremely loyal customers that are with us since day one, and they usually trade much bigger sizes. Our limits, are not so attractive for them, but they love the user experience so much that they stick with us despite that. They as they said, it's just fun for them, to trade on DXS, because the number of clicks you need to make to risk manage your positions is so small. For example, there is no other platform in the world, and this may sound silly actually, but this is DXS is the only trading platform in the world when you can protect your position with a stop loss with just a couple of clicks. So I have a profitable position. I don't want it to become losing position. I want it to get closed if the market goes against me. I just hit 0% stop loss, and suddenly the position is protected. And you see this indication here that stop loss is now set. And you can enter the position details. Here's the stop loss. And on any other platform, you would have to do like up to 10 clicks to do that. Enter the stop loss edit, manually enter the price. You need to know the entry price. So this is like a very good example that when there is a conflict of interest of your customers and you as the brokerage service provider, you want to create artificial obstacles for your customers to set a stop loss. Actually, it's just a good example I forgot to mention. I should have.
Okay, well, I think if not, Armen, thank you so much for your time today. Even as someone that knows DXS well, felt like I learned a lot today. And thank you everyone for joining, and for those that ask questions. It's always a pleasure to do these investor webinars, and looking forward to the next one in a couple of weeks. Stay tuned for details on that. Okay, thank you.
Thank you so much for your time. Bye-bye, everybody.